please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A positive start, just a mild green, 10 points higher on the Nifty, 73 higher on the Sensex.
Across consumption segments, we have seen uptick in volumes, and we are going to see more of that as we go ahead.
Yes, there is a lot of synergy between MRPL and HPCL. Going forward, we can look at different options.
We've come off a tad actually from the high point of trade, but the Nifty is still holding on to the 10,900 odd mark. The gross NPA is 5.28%. The net NPA has come in at 2.56%. So in terms of the gross NPA, it has come down.
Another record day. What a start to yet another week. I mean, January so far, 4% up.
Bulls continue their record-breaking spree. Both the Sensex and the Nifty hit fresh lifetime highs. Reliance Industries hits a record high, contributing 50% to the index gains.
Mid-caps also maintained the momentum, with the index gaining nearly a full 1%. Soba, Shemaru, Just Dial are just some of the many stocks which close over 10% today. IT stocks also contribute to the gains.
Axis Bank rallies after over a 3% gain, reporting a third quarter turnaround. Asset quality improves sharply and the bank beats estimates on several parameters. Nifty Bank Index conquers 27,000 for the first time.
ONGC rallies after it initiates the acquisition of majority stake in HPCL for 37,000 crore rupees. HPCL slumps in trade as the buyout is lesser than the expected price.
And Jubilant FoodWorks gets its mojo back. Brokerages upgrade the stock after stellar Q3 earnings. Stocks like Varun Beverages and Cafe Coffee Day rally in tandem. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talkback, the show where we tell you about 8 hours of hectic trading today in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Lata, hi. And over the next 30 minutes, we will discuss the top 5 headlines. As you said, our experts will join in to answer your stock questions. Joining us now to answer all your questions are Deepan Mehta, member of the BSE and NSE, and technical expert Mitesh Thakkar. Gentlemen, thanks very much, both of you, for being with us here on the show. Before we come to both of you with the questions, let's quickly take a look at how the markets fared today. Lata, I dare say it's getting a bit boring, repetitive, I should say. New all-time highs.
Well, actually, it does look like it's easy to make money. Nothing seems to be stopping the bulls. And today they got an additional reason to rise because the earnings were good. Reliance was good. Jubilant FoodWorks was good. And, you know, when Jubilant is good, it tells you that probably urban demand is back in its full ferocity. Reliance tells you that the telecom industry company has also started making money. And, you know, therefore, it's a many-horse race now. Sensex and Nifty made all-time highs, not just on the strength of, you know, one stock, but a bunch of stocks, like, say, TCS and the IT stocks did well. Capital goods, I mean, L&T came out of nowhere and performed. Axis and therefore the banking sector did well. So, you know, running on many horses, and you could say the same thing about the mid-caps as well. You know, you had, say, realty stocks, Soba, etc. doing well, as we said in the headlines. Shemaru, entertainment stocks doing well. IT, we forgot about that. Just as TCS in the big boys, there was Mindtree and Co. Doing very well in Mindtree, even Just Dial doing very well in the mid-cap space. So, you know, the bulls now look so much in control, with growth as a tailwind, with earnings as a tailwind. It looks like a shutdown of even the biggest economy doesn't really matter.
Looks like it. Although I think one has to keep one's eye on the market breadth. For a market this strong today, I mean, if you look at the NSE, there were 1,100 odd stocks higher and 960 stocks which were lower. So, I mean, it would have one would have felt much more comforted had the gap been much larger. But I'll get to some stocks, really. So, pockets of strength: real estate, energy and IT, 3 areas which really stood out. Pain points were PSU banks and metals. If you look at the top Nifty gainers, there was TCS, as you said, Reliance, L&T, which did very well. Large caps which lost. Wipro had a down day. HDFC, which has had such a spectacular run, was down, and Gas Authority of India was lower in trade today as well. I mean, the deal with ONGC, HPCL, ONGC went one way, HPCL went the other way. We, of course, will discuss the reasons and maybe get a question or two on that in just a bit. Results reaction, there was RIL, but there was Axis Bank, which came during market hours. There was Havells, which came during market hours. And you look at something like a Jubilant, which came on Friday, and basically it's up 20% over Friday and today. Big winners: Sobha, Just Dial, Mindtree, Look at BHEL, look at Radico, look at something like a Biocon, which was actually pretty strong. In terms of losers, well, the big ones at least, Gru was down by close, I think 14% or so, Cyient, and something like a 1% lost ground as well. Lata.
Okay, well, with that first, let's take the market itself, the headline indices itself to Mitesh. Mitesh, what's your sense? I mean, if people have ended the day with long positions, they continue. If they don't have long positions at the end of the day, you would advise them first thing tomorrow morning?
So good evening, Lata. I think, on the index, we also kind of partly missed the bus. Nifty, I was not very comfortable buying around the 10,850 mark. It was looking quite overbought on the intraday charts. But individual stocks, and you could clearly see, a lot of breakouts, seeing good follow through, especially in the large cap stocks as well. We have seen L&T do extremely well, TCS and the entire IT pack, barring a Wipro, I think do extremely well. Possibly Reliance today had a breakout as it managed to get past and close above the earlier highs of 955, 960 zone. So I think stock specific basis, definitely I think long trading is advised. While you might see some psychological profit booking around the 11,000 mark, I think eventually the weight of all these stock charts on the short term basis is clearly pointing on the upsides.
Okay, so that sets us up nicely for the more questions. And this is the second headline of the day. Mid-cap stocks surged and trade about a full 1%. Soba, Shemaru and Just Dial all closed over 10% higher. IT stocks, mid-cap IT stocks also contributed to the gains that we actually saw today. We've got a couple of questions, Lata.
Yes, so let's straight away, because it's mid-caps, there are plenty of questions. Well, Deepan and Mitesh, here we come. Twitter user Muhammad Ali has 100 shares of Soba Developers and he purchased them at 531 rupees. He wants to know what he should do next, hold or sell. Well, he hasn't given us, exit time. But Deepan, basically he has a good thing going, you would say. Should he stay
I think
or hold?
absolutely. Remain invested in Soba Developers. I think they reported the numbers for the actual sales which they made, which were quite impressive. And I think that the real estate industry is in a bit of a transition at this point of time. And with RERA and sort of inventory which is there in the system and GST, once they are over and done with those humps, you may see decent growth coming in over there. So I think there's a nice trading bounce in real estate stocks at this point of time. Investors should certainly ride it. But I'm not that positive about the companies on the 3 to 5 year kind of a view. So they're not great long-term stories, but there's certainly scope for them to move up in the short term. And Soba especially is one of the better real estate companies. We have at least some more comfort as far as the corporate governance standards and the strategies for expansion are concerned as compared to some of the other real estate players. I would say remain invested in Soba for the time being.
Okay. Well, quickly, Mitesh, your thoughts. It found a roof at 620, was it 620, 630 last time around. What should Muhammad Ali do with his 100 shares?
Yep, Lata, actually two highs at 630, you rightly figured it out. And last week only, in fact on Friday only, it made a low of around 530. And 520 is a very important swing low. It looks like it's been doing this range of 630 to 520. If you look at the last 2.5 months of data, I think now we should get an upside break. So one, you should trail his stop loss to just below 520, 510 is my advice. And once we get past 630, the next logical target should be in range of 700 to about 730, which is where he can look to take profits.
Okay, we have another question coming in, and this is an interesting one. Twitter user Sanket Verma has 80 shares of Just Dial, which is bought at 485 rupees a share. He wants some advice as to what his next move should be. The price is 600 as of today's close. Deepan, what would you tell him? What's really going on Just Dial?
Well, I don't really know what's going on in Just Dial. All that I can say is that last 2-3 years have been pretty challenging for the company. And the strategy was to try and monetize the search business. But they have been very successful on that count. At the same time, Google and some of the other applications have really overtaken them when it comes to search and giving an opinion. So I would still be a bit skeptical as far as Just Dial is concerned. No doubt the stock has gone up and maybe you could have a good result also. I would say wait for the result and then look at getting out of the company. But it's a stock that you should not be invested in for a long period of time. You could trade in it from on and off, but it's not something where you can see visibility of earnings or how the company will be, say, 2-3 years from now.
So institutions have bought in as well, although not sure what the reason is. Let's get a quick price view as well. Mitesh, Just Dial at 600?
Actually, I'm quite positive on the medium to longer term charts. It's made a important double bottom at about 340 levels, and then we saw this HDFC mutual fund pick up big stake around 390 mark. 380, 390 mark, and I think now it's gone into an uptrend. Around 610, 630 some kind of historical pivot, but I think eventually it will cross that and possibly head towards 730 odd level. So I would still suggest to hold the stock and look for targets around 730.
Next line.
Okay, the next headline for the day, the third headline that is Axis Bank, of course, the big number from the private banking space which came today. The stock was up over 3%. It reported a third quarter turnaround, beating street expectations on most parameters. The company reported a sharp improvement in asset quality. But let's just quickly wrap up the numbers itself, Lata. I mean, what stood out to you?
Yeah, well, the NII was more than expected. The net interest income was expected to be up 4%. It came in 9% higher. And the slippages, which were 8,000 crores, not actually 8,900 crore last time around in second quarter, have now slipped to 4,400. So half the amount of slippages. So therefore, the gross NPL as a percentage of total loans, the total bad loans was 5.9. It has now become 5.28. So, good 60 basis point fall. Even if you look at the net level, it's fallen rather sharply. But, I'll tell you where some of the concerns are coming from. That many of the slippages, as we call it, slipping from good loan to bad loan, have come from their non-watch list. They had identified a watch list that's fallen by about 750 crore, but the slippages are 4,400 crores. So, good 3,600 appear to have come from the non-watch list. And also, there were two big accounts. One was that Aegis BPO, I think so, and one was, I think, JSPL. Both of them have got upgraded now. The cash has been recovered. So that also has added to the interest income. If you didn't recognize them, then the interest income would have been just 4% as the street had expected. So it's not yet a confirmed growth story. There is that niggling worry. But for the moment, you will have to admit that compared to 5.9, that 5.28 is a vastly better number when it comes to the GNPA. So good numbers, but yes, there is still a little bit of caution both on growth and on asset quality.
Let's hear out what the management had to say on the numbers.
We have a BB and below pool of give or take about 16,000 crores. That's the pool from which we had said that over the last 6 quarters, about 86% of the corporate slippages came from the BB and below pool. This quarter, that number was 93%. So all the slippages are indeed coming from the low-rated pool. The old watch list that we had, which we declared 7 quarters ago and which we said we will wind down after 8 quarters, you might recall that we started with that being at about 22,600 crores, and that watch list is now down to about 5,300 crores or thereabouts. By the end of next quarter, which will be the 8th quarter of its existence, we plan to wind down the watch list, and it will not exist in our lexicon anymore.
Well, with that, let's get to the questions. There is a Swapnil Jain who has sent us a question on Axis Bank. He says he has 50 shares which he bought at 510 rupees, has been holding on to the stock for 4 months, wants to know if he should hold or sell. Well, your thoughts, Deepan?
See, I think he's more of a short-term investor, so maybe Mitesh would answer it better. My long-term view on the bank still remains negative because, we are more in tune to buying something like an IndusInd Bank or HDFC Bank for that matter, or Yes Bank also, where there's growth for P to get re-rated upwards. So I would still say that avoid Axis Bank. They are losing market share even as we speak. The numbers are not as impressive as some of the other banks have come out with. And I'm not yet convinced about the whole GN, that NPA problem getting resolved or so. So while there could be a trading bounce because of such positive news flow on and off, but it's not a secular growth story for us.
Okay, not yet. Mitesh, what's a technical view? 510 is his purchase price.
Yeah, so in fact, Lata, I think Dipan was talking about some kind of a bounce back. I think that's already underway. We have seen the stock do well, rallying from 560 odd levels in the last about 8-9 sessions to now at about 620. 620 is the level where the stock has had its highest ever weekly closing a couple of years back. So I think around these levels you might see a stall. But I think the charts are still positively biased, so there will be more upsides happening. So I would suggest hold on. And once we get past the 620, 630 zone, I think the stock can head towards levels of around 670, 680 where trading profits can be booked. Okay,
so there you are. He's sitting on a 20% profit now, but Mitesh says you can get more. We take a break. On that note, we are coming back with more questions and headlines, but let's also leave you with what the renowned economist Nouriel Roubini said on what he would advise the government in terms of the fiscal deficit in the coming budget.
My advice will be that, first of all, the budget deficit of India is still large at the central level, but also you have fiscal problem at the state and local level, and therefore fiscal prudence is necessary. And the risk is that even if you wanted to do a fiscal stimulus as a way of boosting economic activity, what you have observed in the last few months has been the long-term interest rates in India have gone higher, and have gone higher not just because of global factors, but more importantly because there was a concern that the fiscal deficits are too high.
Welcome back. You're with us here on Markets Today Talk Back. We've been answering your questions with our experts who are here with us. Straight to the fourth headline of the day then. ONGC has acquired HPCL for around 37,000 crore rupees, essentially what the government owned in the company. The market rewarded ONGC for making the acquisition at a lesser than expected price and without an open offer. HPCL ended the day down by around 3% or so.
Part of this funding we'll do it from our internal accruals. Then, as you rightly said, that we have stocks of IOCL and GAIL. And apart from this, we have taken required approval from the board for short-term borrowing. We have tied up all these the borrowings with different banks. So, you know that the stocks together we have something like 25 to 30,000 crores. Banks, we have tied up close to 50,000 crores of short-term borrowing. As of now, we have all these options open. First, we'll definitely access our internal accrual, how much, whatever amount we decide we can spare, and thereafter we'll work it out, whichever works out beneficial for us.
It is a logical thing to do because MRPL is a standalone refinery with no marketing arm, and HPCL has got a more marketing capacity than the refining capacity. Last year we sold around 35.2 million metric ton, while our refinery capacities are shorter than that. So having MRPL along with us helps us in bridging that gap. HPCL, ONGC and MRPL board have to sit together and decide. The formal discussion on that have to start. But I believe that if there is a value which can be created, we should try to make an effort to do it the earliest possible.
Well, that's what the management said, and we have some questions on these stocks. Twitter user Umang Agarwal has 800 shares of HPCL at 425 rupees. He says he can hold it for another 4 months. Wants to know if he should book profits. Well, short term, so I'm asking you, Mitesh, at 425, what should he do?
Yeah, I think, Lata, my sense would be, I think taking profits would be a good idea. I have not been very positive on the OMCs for quite some time now, and while they have not fallen as much, they've really started to underperform the markets in the last few weeks. So I don't think there's much upsides left, at least in the short term, so I think good time to take profit.
Okay, we have a question on ONGC as well. Sunil Kumar has sent us an SMS from Delhi. He's got 600 shares of ONGC. He paid about 190 rupees for them, 190 rupees a share. He's been holding for the last 3 years. And he's a long-term investor. Should he continue to hold or sell here? Dipin, what would you tell him? Sell,
I would say. Not very positive on the oil companies. And with election season coming up and oil prices on the boil, the temptation would be there to, not allow the oil companies to increase their prices. So they'll suffer as far as marketing margins are concerned. And I would say that it's best to avoid the entire oil marketing space. There's no volume growth to support any pressure which may come on the margins.
But you'd say the same for ONGC as well?
Absolutely. I think entire oil marketing, all the government-owned oil companies need to be avoided. Gas Authority could be an exception. I mean, it's not exactly in the oil space as well. It's more into transportation. So except for Gas Authority, I think best to avoid BPCL and ONGC and then those.
Yeah, even ONGC, I think after a point, the government doesn't allow them to keep their profits. Fair point. Okay, we'll get to the final headline of the day. And at this juncture, we shift focus to quick service restaurants. Jubilant Food seems to have got its mojo back. More people eating pizzas. And the brokerages across the board have upgraded the stock after the company reported stellar set of numbers for its third quarter on Friday. The stock ended the day over 8% in the green. And along with it, took up stocks like Varun Beverages and Coffee Day.
We got a question now. So Tushar Poldia has sent us a question on Jubilant Food Works. via an SMS. He's got 350 shares of Jubilant Food, and he's paid 1,000 rupees a share for them. So he's doing very well. He's been holding Jubilant for the last 1 year now, and he wants to know if he should hold or sell. Deepan, what would you tell him?
I think 17% same-store sales were impressive. The company seems to have entered a new growth phase. I would say remain invested. No doubt valuations are on the higher side, but remain invested. I think one good quarter leads to another good quarter, as we have seen. Next few months could be great for Jubilant Foodworks, but I'm not that optimistic on the longer term, like 3 to 5 year prospects of Jubilant, because there are a lot of disruption happening as far as the quick service restaurant and the food delivery business is concerned. And the edge that Jubilant had a few years ago doesn't exist anymore. At the same time, I think they've worked very hard on, turning around their operations and getting into the right spaces and making sure that their restaurants are profitable. Only negative thing in the entire numbers was the absence of any new restaurants coming up, which means that they're milking the existing space better. But you really want a growth company should have at least 15-20% new restaurants opening up, which is missing over here.
Thank you very much for that, Deepan. Now, well, we can't toss this to Mitesh. We are out of time. We wrap up this edition of Markets Today Talkback. Thanks much for watching, and do keep writing to us with your questions.